Aloha, everyone. Joshua Hayes at BigWaveTrading.com. I did not have time last weekend to make an official weekend for everyone on YouTube. So, what I did is I had a couple of long ideas on Friday, and I just decided to go ahead and make that video public to everyone so you can see what I'm getting long on Monday. Little did I know that would turn into an amazing lesson on how I trade because on last Friday, KTOS after this day was a new long signal. Look at how it performed this week. I must have taken some big losses on it, right? Okay, let's just keep that in mind. Let's move back to what it looked like on that day. And then I gave an NVIDIA possible short idea by getting long an inverse ETF, NVD. Whoa, it was working really well, right? And then, oh man, I must have lost a lot of money on that day, right? Well, you guys might be surprised to find out if you followed my rules, KTOS was a $0 loss, NVD was a $0 loss. How is that possible? It's the power of using my methodology with buy stops. Now, listen, this is not a superior methodology. I'm not saying it's better than one methodology or another. There have been multiple times by employing this buy stop methodology where things like NVD work and then they end up going to 28 without me and I have no position in it. But overall, it's a good methodology because when it works, I can get long stocks via strength, keep my wrist tight if they don't work immediately. And then if it works, awesome. And then when I get what I would consider great setups, which IMNM in perfect hindsight was, and I'll explain this one, why it was, you can get huge, huge, massive rewards. So, white triangles on the screen means that I added it to this watch list the day after the signal, which means I got triggered and filled. If you see a white triangle, I am long. If you don't see, well, let's update it. If you don't see a white triangle, then that means I am either not long and or have cut my losses. So I want to review 3 recent swing ideas that have failed. 1 triggered me in for a loss. 2 were no losses. And then I just want to show you an example of how the methodology works. So first off, KTOS. If you guys don't remember on the video lesson, I clearly stated I wanted to get long above the intraday high of day, 2099, to get long KTOS as a potential earnings winner continuation move. My buy stop was 21. My buy stop limit is always a 1% limit offset, 21.21. Lately, I've been rounding it up. So if I'm getting in long at 21, my limit offset is 21.50. The next day, did KTOS trade above 20.99 to trigger me in at 21? It sure did not. Is the trade still on the books after this day? It sure is. Then we have this session. Volume declining, this indicator trending up. If anything, the signal from Friday, I loved it even, or didn't love. Let me make that very clear. I liked it even more on Tuesday. Then on Wednesday, that happened. Guys, well, actually, that's right. It's a shortened holiday week. So this was the signal on Friday. This was Tuesday. This was Wednesday. Still really like this trade setup. And after this day, that's it. Let's say that it did trigger me in at 21 the next day. I would immediately have 50% of my stops here, the final 50% here. The very next day, I would have been cleared out of half of the trade. 50% of my stops would have gone here. The final piece right here would have been knocked all out at the open on this day. However, and as you can see, it got worse. However, 21 was my trigger. 21 trigger, no trade, no losses. KTOS, no loss trade, even though following my signal to get long, it's down 13%. Now, how come I didn't get long NVD? Well, on this day, my limit is 935. My limit offset, I believe I rounded up 10 cents, 935, 945. So my buy stop is 935. My limit is 945. Look at what the low of day is, 948. It gapped up, did not trigger, or triggered, did not fill because it never, ever traded at my limit price, which is 945. Now the stock or the instrument is up 8% in one day. What do you think I do? I pause the trade. The trade is now paused at Interactive Brokers Trader Workstation, and it does not go live again until it trades below 934. Once it trades below 934, as long as the pullback is orderly, normal, and this chart still looks clean, I remove the pause and call back on the trade. The very next day, it was higher again, a 14% winner in 2 days. Awesome, right? But remember, I don't have a position and my order is completely paused. Now NVIDIA has earnings and bam, that would have been a full R loss plus some. Now let's pretend I would have been triggered into it the next day. Let's say that 944 was the low of day and I'm long. Following this session, I'm taking profits now. I have 2 stop levels to work with and then a market sell order. So I'd be out a third with a third stop here and a final third stop here. The next day we're higher again. Because earnings were the next day, I would have sold more with a stop here, here, and here. Would have been then all out the morning when it opened at 817, probably for a little under a full loss. But once again, by being disciplined, 935 stop, 945 limit offset, then pausing the trade once it runs away from me, I avoided that loss. So those were the 2 recommendations from Friday's video. KTOS, NVD, 2 big losers, both of them $0 in losses on my end. So that's the power of the way that I trade on a swing basis. Like I said, there are many times I end up having NVD happen to me. I miss the trade by 3 cents and the stock runs 50% in 3 days. C'est la vie. Oh well, nothing I can do. I don't FOMO. I don't chase. I'm not undisciplined. Does it hurt me a lot of times? Yeah, but it sure does save me a lot of times. Now I want to review a swing trade that I gave everybody that triggered and filled but didn't work, and just want to review it. Now, I can't remember if it was this day that I gave the trade idea. Let's just say it was. It looks like it was. So once again, 22nd, 23rd, looks like that's not it. It would have had to have been this one right here. Maybe. I don't know. Either way, let's just go with this one because I know for a fact I gave this as a long signal on this day following the pocket pivot point signal and that little increase in BOP. So I want to get long above 25.76. Well, I did. And I'm long. Now following this day, what do? I start trimming and trailing. I put a stop here, a stop here, a stop here, and a final stop here. Stock moves higher again, put another stop here. So now I have all these stops. Now with that heavy volume intraday reversal, I immediately remove this as my final stop, and this now becomes my final stop because the stock showed earlier in the day how strong it was, but yet closed near the low of the day. So something is off. Pulls back and obviously runs my stop. So I believe I'm out of it on this day. I can't remember quite whenever I try to get back, but I think it might have been this day. So try to get back in this day. Once again, though, no trigger, no trade, no losses. But for this trade here, when my final stop is now here, once it moves below this low a day, 24.68, on this session here, 24.43, I'm stopped out and I avoid a larger loss. But XP has now officially failed. Still, with that being said, from that entry to that final loss, it's about a 4% loss. Not too bad, right? Not too bad. Now I want to show you another example of how the buy stop saves me. IXHL, I just made this an idea to get long on this session here on Thursday. I wanted to get long because it's an inside hammer candle after a powerful surge in this indicator in volume. It's a trend join. See the higher high or the higher lows, It's a trend join trade. I want to get long at 672, and initially my final stop is here, but I'm not calculating my size from there. I got to give myself some room just in case it triggers, fills, and fails. Well, oddly enough, it basically tried to fail out the gate. But I'm going to ask you, the stock was down 25% on Friday. How much did I lose? Zero, because it never triggered its 672 with that 7-cent limit offset. 672, 679 limit, no trigger, no trade, no fill. Is this order still on the books? Can you put it on the books? Yeah, it's still on the books. It pulled back on lower volume, still maintaining that strong max green bop indicator. I'm good to go until we close below this low on heavier volume. So even if we fade, as long as it's on lower volume and we keep this max green bop, I'm good with it all the way down to here, as long as it pulls back orderly and properly. Do you guys want to see a trade that I just went long and how I'm tight with my stops in case they don't work immediately? So I mentioned to everybody, CBOE is a better long right here at this level, whatever this level happens to be. But I'm going to get long strength above 192.16. The very next day, it triggers me in. I calculate my size from this low. This is in my initial final risk. However, after getting triggered in immediately, I get this reversal candle on heavier volume. Where do 50% of my stops go immediately to protect my capital in case things get worse? This low a day. Then I have trailing stops on the rest of the position down to there. The very next day, wow, we're good to go. So now that 50% that's here, it's now 25%, 25%, and now I'm taking profits. The next day, I'm taking some more profits, and now we'll see how that goes moving forward. But on this stock currently, profits, going to take more profits Monday morning. Stop, stop, stop. Final stop is now here because we are in the green. I want to protect the capital. Now I'm going to show you what it looks like, and also you'll notice the white arrow proving that I'm long. I want to show you what it looks like when everything goes perfect. Now IMNM was a great signal, but it wasn't perfect. This is the chart that I was looking at. You already have a volume truncation day on this gap up with max green bop. The best stocks, when they pull, will hold that low as they consolidate before they give an entry. The next best stocks will hold the gap up low. Close enough in this market, considering that it did this on lower volume. We'll consider it horseshoes and hand grenades here. So on this day, I see this, but I don't get long. Why do I not get long? Weaker close than the open. The next day, strong close, stronger than the open, and more importantly, I always look at this chart. So I got to admit, I missed this. This is called a Zoom 4 chart on Telechart version 7. It's antiquated, it's archaic. Even Telechart doesn't know why I'm still using these charts. But I use the other one, the version 23 also. But this is just, can't teach an old dog new tricks, I guess. So on this day, I have 2 days in a row where that bottom indicator surges here near max green, here max green, and volume picks up. What I didn't notice that if I get more granular on a Zoom 5, I get a volume truncation and another volume truncation. When that happens on this chart, here's an example of a stock that did that, BTOG. Let's go back. Zoom 4. Volume truncation, volume truncation. What happens afterwards? Explosive price move. So that's what we want to see. So whenever I get that on this stock, I miss this. I missed this volume truncation, back-to-back volume truncations with it going max green bop. Still went long, and as you can see, there's the white arrow. This is what a stock does. That's perfect. You get that kind of move immediately. So right off the gate, remember that 4% loss that we took in XP? Well, that was just taken out by a 56% gain in IMNM, and using my trimming and trailing methodology, you're taking profits here, you're taking profits after this day, you're taking profits after this day, another big up day, you're taking profits, and you're trailing your stops all the way up. Then we have this day, still going higher, but because we get that red bop, where does my final stop go? Right below this low. We don't have to deal with it. It continues to go higher. Look at how much IMNM is now up 230% in about 1 month and 3 weeks. 230% from picture perfect entry. And that's what we want. That's what we're looking for. What would have made this a larger size for me where I would have really loaded the boat? Well, could have given me the volume truncation on this chart right here, but you didn't. You gave it to me on this one, and you could have done it right off the 200, but price didn't do it. But there's a good example of how things work, and as you can see, I'm still long IMNM. So far, so good. Final stop is no longer here. It is now here. 50% of my stop is here. The final 50% right there to ensure big gains. All right, everyone. Hope you enjoyed the video lesson. You know what to do if you appreciated this lesson. I don't need to tell you. Aloha.